Happy Red Friday, Low VA Rates Nation. It's your favorite loan officer, yes, Maurice Navarro. Hope you guys are having a wonderful day today. So today, our topic is going to be VA loans versus non-VA loans. Seems like a pretty simple idea, but sometimes, veterans don't know why go with the VA. I mean, it's there for you, but sometimes it's good to understand what the other programs are out there so you can maybe better appreciate your VA loan. All right, so we're going to just talk a little bit about, briefly about a few other different kinds of loan programs compared to the VA loan program, okay? So VA, obviously, it's a loan that is guaranteed. Okay, that's a key word, guaranteed by the Department of Veterans Affairs, okay? So VA is VA guarantee. What that means is that though you may go to a bank or a mortgage company, low VA rates like us, only us, right? When you come to us, we will do your loan. We are the lender. We will do all the documentation, the underwriting, and so forth, and we will fund the loan. But we still want to have that VA sort of stamp of approval, okay? What that means is that the VA guarantees a portion of the loan. Okay, that number can vary, but most of the time it's about 25% of the loan amount, okay? What that means is that a lender like us is more willing to give you a better interest rate. There's less risk involved because the VA is involved, okay? In other words, if you as a veteran, God forbid, were to default on your loan, the VA would actually cut a check for that percentage, or they guaranteed, to the lender, okay? In other words, the lender feels more comfortable doing a riskier loan. That's why usually veterans get better interest rates, are able to qualify. The VA has no minimum credit score requirement. This is why we can do those kinds of loans, because the VA is carrying some of the risk. And so you call us, a lender like us, and we actually stick with VA guidelines. So that's very key. In fact, I'm not going to mention a company, but I literally just closed a loan for a veteran yesterday who got turned down by another lender because his credit score was not 680 or up. It's a pretty high threshold, okay? We were able to do the loan. I was more than happy. He was happy. He found us, got his loan done just in a few weeks, all right? So that's one of the things that sets apart a VA loan, okay? There are other programs out there. One you'll hear is a conventional loan. We'll see also FHA and USDA. These are the big ones, okay? So real quick, USDA and FHA are programs that are also guaranteed by the government, okay? So USDA, U.S. Department of Agriculture, and FHA, Federal Housing Administration. These have different requirements. USDA, no down payment. Great. Just like a VA loan, okay? No down payment requirement, but USDA does require at least 620 credit score. Okay? And like I said before, VA has no minimum credit score requirement, but lenders may have their own overlays. That's what sets low VA rates apart from other lenders. We don't try to make it more difficult. The VA keeps it simple, we want to keep it simple. FHA doesn't have a minimum credit score requirement per se, but they do have a 3.5% down payment if your credit score is at least 580, okay? If it's below 580, then you have a 10% down payment, okay? So you're still able to do a loan, but more cash that you have to bring out of pocket. Conventional, usually 5% minimum down payment. But there are some pretty cool programs that have been created in order to compete with the FHA program that require 3% down payment. And yes, we here at Low VA Rates are aware of these, okay? So these are just some of the major programs out there. They've got conventional, typically needs at least a 620. I believe actually it does require for sure 620. But again, these programs too, conventional and FHA, require mortgage insurance. USDA has something similar to it. So even though you may have the same interest rate with all of them, including VA, your payment may still be higher with the other programs because the VA loans don't require mortgage insurance. It's another thing to keep in mind. So again, all these little acronyms here, several of these are government programs with their own requirements to try to take care of the people in different groups, different niches. USDA, for example, is mainly there to benefit people in rural areas, not all the time, but mostly, and or people with that fall within certain income brackets. In fact, if you make too much money, you may not qualify for a USDA loan. If you make too little, you may not qualify either. But again, VA, if you're a veteran, almost 9 times out of 10, I would say, hey, go VA, especially if you have a VA disability rating of 10% or more, because then you're exempt from the VA funding fee. Because that is how the VA is able to guarantee the loan, is on every VA loan that's done, purchase, refinance, streamline, cash outs, the VA charges a funding fee. But if you have a disability rating of 10% or more, you are exempt from this funding fee. You don't have to finance it, you don't have to pay out of pocket, it's just not there. So if you have that, for you almost always, but again, it's always important to speak with your loan officer. Again, you can ask for Maurice to make sure that we can find out exactly. And that's why it's good to talk and find out what program really is the best for you. All right. Anyway, if you have any questions or comments, be sure to post them, and we will get to you. Have a happy Red Friday, guys, and also a happy Halloween. Be safe, guys.